Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this Wednesday, November 30th edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, we're going to talk a lot about oil, all about oil, the USO, OPEC, and their meeting, and what that means for oil. I have a feeling Joel has some passionate feelings about that, so we'll get to that. We'll also get to American Eagle, which just reported about a minute ago. Some UTX rumors overnight. Splunk also reported, and then at 8:35 we've got Tommy Lackey. He's the managing partner and portfolio manager at Relativity Capital Advisors. Joel, how you doing so far today?
I'm doing good. Got the old 5:45 swim in. That's a little late getting in today, but feeling good here. Looking at the S&P futures, big level here, all-time high from Friday, 2211.75. Hit 0950 the last 2 days, so we're either a triple top here or another breakout to the upside. We'll go into crude more detail when Dennis comes on here in a few minutes. Trading up $3.20, even though there hasn't been an official deal announced yet. Gold and silver just still trading lower. Gold holding up above the low of the move at 1170. We did switch contracts here, folks. So if you're trading gold, I believe you're looking at the February, and if you're looking at the silver, we're trading the March. Dennis, how you doing on this Wednesday morning?
Doing pretty good. Just shock here. I mean, that is a big pop in oil here overnight, something that had been significantly underwater. And now, you get this potential deal here on the table, and you see in the USO, if that's your trading vehicle, trade up 7% here in the pre-market. I'm looking at my up and down filter here of the Russell 1000. Pretty much my entire up filter is just littered with oil stocks. The leaders here, WLL up 8%, ESV up 7.3%, CLR, MRO, Rig, Chesapeake. So you got the natural gas, Neighbors, Halliburton. Then you get into the big guns, Conoco, and Exxon, and Chevron, and Hess, all trading significantly higher. We're going to jump into the technicals on all of these stocks here. But Spencer, give us the details on what has propelled this oil rally here overnight.
Well, all right, first I want to highlight some comments from yesterday morning from Tudor Pickering, commenting on the likelihood of an OPEC cut and outlining some scenarios. Tudor said that a reduction of 1 million or more barrels per day would send crude oil up $10 a barrel. So keep that in mind, because, let me pull up my other thing here. We do have, there is like a closed door meeting or a pre-meeting happening right now. And we are hearing that OPEC is close to agreeing to 1.4 million barrel per day cut. So that could be the driver right there. We had some non-OPEC contributions in that. We're hearing Russia. We'll wait for after the OPEC thing, but the Tudor comments with the scenario there, $10. Oil would rise $10 should they cut 1 million barrels per day, and we're hearing 1.4.
Come on. They just the up 10 points. That was a ridiculous call. It wasn't going to rally 10 points. So don't get all excited and think there's another 7 points here on the table for oil, because I don't see that happening. Do you see that happening, Joel?
No, and
that's ridiculous. Well, that's a ridiculous call.
Yeah, was that Tudor Jones, or is that was that a different Tudor? Whatever the case is, and
it was Tudor Pickering.
Tudor Pickering. Okay. You guys are saying here, don't mention OPEC to Joel, or what's Joel. I don't have anything against OPEC, and I don't know the fundamentals as well as maybe some other people in the chat. But when they say they're cutting, right, and they're cutting production, like, who monitors? I mean, yeah, there's official, barrels coming into the United States, but to me, these guys are going to cheat. They're going to say they're going to cut, but they don't. They will just, we get the price up, they pump. I don't know, and maybe someone, Larry, someone that follows the crude market, what kind of checks and balances is there? If you say you're going to cut by two, by this amount, that you actually do. I mean, that to me, that's the question. I mean, I think these guys they're pumped it up. They moved the futures up before the actual announcement. Who know if they were buying there yesterday? I mean, Nick Shaheen's always said this is a rigged market. No pun intended. And to me, I don't know. Someone in the chat, Spencer, Dennis, someone help me explain to me how when they say they're doing this, that you can actually legitimize that they're doing what they say they're doing.
I have no idea, but I'll tell you, price don't lie here. So they obviously are pretty excited that we might get this potential cut. And obviously this is still not officially announced here too. So there's still, just, rumors here happening. But it looks like, if they do that 1.4 million barrels here, I don't think we're going up 10 points, but the market's priced in some pretty nice, especially on the individual stocks here. I mean, should we just jump into them, or
Sure, let's go
do
ahead.
the technicals on the USO quick first? Do the technical breakdown on the USO because a lot of people like to trade that vehicle here. So we know oil itself has popped 3 points. USO is trading up in the pre-market about 7% here right now. Give us quick technicals on it.
Okay, USO popped up to 1090. That corresponds with the $49 level in the crude oil market. We are trading January crude. Take a look. We've snuck over $49 three times here since the middle of since the end of October. So keep an eye on that current high 49.12. That corresponds to 1090, $11 in the USO. And Dennis, you and I were chatting, just on the pre-market show about the options. And if you actually tried to play this, well, if you went out and bought the tens here, you could have paid 40, 41. Okay, so you're in the money here a little bit. But if you would have actually bought the 1050s, went a little bit out of the money here,
These
boy,
are the
oh,
weeklies.
yeah, these are the weeklies. This is your most bang for the buck here. It's currently trading at 1076. So for that 20 cents worth of risk that you bought in the 1050s, you would be up 6 cents.
Wow, it's just so hard to buy options. I mean, here you get a move in your direction. It goes 7% in your favor, and you're still hardly making anything on it. This is just a classic example of why these weekly options, buying these weekly options, do not work in the long run. You can say, oh, well, I made some money on this trade, but long run, you keep gambling, you keep betting on these things. They price in these events, and and even if you get an outside event that isn't priced in, the premiums just are too high. It's it's just it's too difficult to buy options. That's why I love Nick Shaheen's strategy where he's always selling the options because his money made selling options and he always protects himself and he does it in a smart way. And, selling the naked options just with not covering yourself there. He always has a higher call or a lower put that he buys to protect himself when he's doing those credit call spreads or credit put spreads. But there's a lot more money to be made selling options than there is buying them.
All right, should we run through the big guns here? Just take a look at the
Yeah, for
big
sure.
Exxon Mobil. Dennis, you've been preaching about that $88 level.
And it's
Pre-market
right there.
pre-market high is 88.14. Bunch of highs here, the 88. Let's see if we got some institutions there. CVX was looking like it was going to break down yesterday. That traded up to 112.08. I mean, all these. I mean, I could give you numbers on all of these, but it's just all dependent on what the official announcement is. But I think for
Do
now,
you think now they officially come out and they officially cut 1.4 million barrels? Do you think we get more of a pop, or is most of this pop already priced in?
God, well,
Tudor
no,
thinks we go up another
yeah,
$7.
$7. I better buy
Come on,
the.
I'll take the other side of that. I don't think there's no way that crude's gonna be up at $56 if we get this official announcement.
I
So
if it.
I'm calling no way on that one. I think majority of this move is priced in.
I
So
have to agree.
maybe you get a few people caught short. Maybe you get a little bit of follow through here. But is this the new start of the oil bull market? A lot of overhead supply still. We trade up in this $50 area, 52, 54. There's just a lot of overhead supply up here. So I don't know if we're just going to plow through and start going 55, 60, 65 and oil's back. I don't know if I see that happening here. So, and I don't like chasing moves. I hate buying stocks when up 7%. I hate buying an Exxon Mobil when it's trading at $88, when it's been a wall of resistance for the last 6 months, basically. Really since the summer, 88. It snuck its head over there a couple times, but really the level just jumps right out at you like a sore thumb. Maybe, it takes it out. Maybe it goes a little bit higher there today, but, that's been a major resistance point. Now you're buying it right into resistance.
And one other thing here, and I'm like again, I'm no economist here, but you're talking about the supply here, right? They're restricting supply. I mean, is there an increase in demand for oil? I mean, I don't know that. I mean, yeah, the supply is going to be less. That's one part of the economic. I did learn that in economics class. Supply and
You remember your
demand.
little supply demand curves?
Yeah, but I mean, is this going to increase demand? You're going to have to pay less supply. I don't know with all the solar stuff and everything going on. Very skeptical of this move, but we'll see. There's some great volatility here in the January crude oil futures. Already traded 500,000 barrels here, so big day, big volume. We'll see what happens when the official announcement comes.
It is catching a few people short, though. I just, there was a breakdown day. Even looking at Halliburton there, we got somebody in the chat saying that they're taking some heat on it. And I mean, it's out of the blue. So, you look at that chart and the Halliburton looked pretty good, like a little head and shoulders there. And then boom, now it's right back up there at the old neckline again. But again, 47.79 yesterday. It's up here $50, up 5% here. I don't know if I can just jump in here and start buying it here right at the old resistance level or not. Maybe it blows through it. Maybe it continues to go higher here. Yes, sometimes these moves can, continue. I want to see what happens in that first like 10, 15 minutes of trading. Where the stocks open, where these individual oil stocks open. Is there follow through? Is there people hungry to get in these things? Or is there people hungry to take, some money off the table? Because a lot of these oil stocks were looking weak for 2, 3 days ahead of this. Now we get the sudden pop back up to levels that they were just at 3 days ago. I mean, Halliburton, you can get all excited and say it's up 5%, but this is where the stock was 3 days ago. So it's not like, whoa, this is awesome. It's back to where it was 3 days ago.
Did you see the Seadrill, Dennis? Remember we've talked about that stock for a while. Boy, I don't know if it's trading up here in the pre-market. Yeah, it
It's
is.
up 10%, but that's 23 cents. It's only a
Yeah,
$2 stock.
look at that thing. I mean, holy macro! Remember when they had a huge dividend and they cut
I
that?
was at $20.
Whoa! Look at
And
that.
it never came back. So
Eh,
it went from 20 to 12 that day. I'm just going right off my memory, and I think I got it right.
Yep.
And it never came back. I mean, when these things start cutting those dividends there and they're trying to save cash, now the dividend is zero on it. It's a tough comeback. And you can say, okay, well, yeah, Seadrill, this stock used to be $45 just 2, 3 years ago. I get a great deal, $2.68. We still don't know if the operations are even viable at, at $50 oil. A lot of these companies are still struggling here. Oil gets back to 70, 80, $90. A lot of these companies start making some serious money again, but they're just holding on here in the 40s and the 50s.
And
So, you really, when you put it in perspective here, yes, this, supply cut might help, overall, but a lot of these companies need more. They need the price a lot higher than this to really get back to profitability.
And just one other thing to mention. I mean, OPEC, right? Does that mean that the frackers can't come back online here and add more supply? I mean, OPEC does. I don't know the percentages of what they control the oil market, but there's a lot of U.S. production, and boom, it gets back over $50. You get the frackers coming online. Boom, more supply, not necessarily more demand. So very skeptical here on the oil market. I'm too opinionated to trade it though,
Oh,
because
I am too, and that's why, I probably will be trading it. I'll probably try some of these resistance points there, but I'll be quick to get out if they start taking out these resistance points. Like for example, in ExxonMobil, it's struggling here in the pre-market at the $88 level because that's where it struggled forever. It starts going 88, 20, 88, 25, 88, 30, then you got to start thinking, okay, maybe that trade's not working. But sometimes these stocks, can open at the highs too. So a little bit, everybody gets excited, maybe opens a little bit too high. So that's the opportunity where I'm looking, but if a stock opens and gives you a print at 88.10 and then doesn't start coming in right away, that's your sign that hey, maybe there is still more buying pressure in this market. So you got to be quick to flip out there too. I don't want to take a lot of heat if I'm trying to short, some of these stocks on the open. I want to see them come in right away. That potential for maybe a stock to open at the high. If a stock opens at 88.10, starts trading 88.20, obviously didn't open at the high, and maybe that strategy, isn't working. But remember, it used to say, Joel, wasn't it like you used to tell me this? Wasn't like one out of every or 25% of the time a stock will open at its high or its low of the day or within like a nickel of
A
it.
nickel or a dime, yeah.
But didn't
Yeah.
you have a stat like? Because I remember that was one of the first things you taught me back in 1999 was, stocks so often will open at their high or the low of the day, and if you can get on the right side of that trade, there's some big money to be made because you're taking zero heat if you're shorting at the high or buying at the low.
It,
So, and I've made, my whole living basically, trading those opens. I probably throughout my 17-year career, I've made the majority of my money right on that opening print and just going by that strategy, putting on a lot of stocks and the ones that aren't opening at the high, getting out, and obviously the ones that I think I might be short at the high of the day, trying to hold on for a little bit. There's some money to be made doing that strategy.
and this is final. Let's just turn this into just a real quick educational segment, and then we'll move on. There's going to be a lot of stock in the book here, right? And just think about all of
Yes.
those sellers, 86, 86 and a half. Look how everyone was trying to wiggle out at 87 for 4 days in a row. Then you got 87 and a half. Then you got 88. I mean, there's a good chance, Dennis, that you could be shorting this thing in the pre-market at it's 88, 85, 88.05 or something like that. And then just because of the stock in the book that satisfy the buyers and all the sellers that don't cancel, I mean, this thing could open up at 87 and a half and boom, go straight up. But we'll see. We'll wait for the big announcement here, big anticipation. Crude trading up $3. I mean, it's just jumping around here like a ping pong ball. And the S&P futures too. Just if there's no deal here, look out below here. We are just bumping up against all-time highs. So no deal. The spoos could fall out of bed. But right now, it's everything's moving to the upside, indicating a deal imminent.
Let's just take it a little bit further with the education here because you're making a great point, where a stock might open too low. We talked about stocks potentially opening at their high, but there could be some stocks with some size in the book that might open too low here as well. There is a ton of oil stocks to trade. So, what I do, and you could call it a little bit of like piston trading off the open. Piston trading, I think, was something that was actually coined by Don Bright. So it's something, where, you think about a piston, some of them are up, some of them are down. So if you look at it all, instead of just your classic pair trading where you've got one stock up, one stock down, with the piston trading, we've got multiple stocks trading in the sector, and some are going to be a little bit too high and some are going to be a little bit too low. And the idea is to sell the ones that are a little bit too high and to buy the ones a little bit too low. You've got to consider betas, you've got to consider a lot of other factors in there. But that opening print is, there's some size. I even look at a stock like OXY, for instance, here. I'm looking in the book of OXY, and this is why, there's so much more than just technicals. When you start looking at order flow and you look at the book, that's what make the technicals happen. It's order flow that makes what makes the charts. It's not technicals that make the charts. It's order flow that makes the charts. Buyers and sellers. So I look at, I see 39,000 shares offered in the book at 69.50 on a stock like OXY. Well, that might hold the opening print down a little bit. Stock is actively trading here at 70.20 right now in the pre-market. So, maybe you get a shot to buy this thing on the open at like 69.60, 69.70 if it holds that opening print down a little bit, and maybe it runs up. So, that might be a potential for a stock that opens a little bit too low relative to maybe some of, with their betas into where the other ones are trading as well. So, the way I approach this is, I put some bids out there too. So if I think, let's say, Occidental Petroleum, this is just an example, but let's say, the pre-market has priced it correctly right now at around 70 and a quarter. The trade is to maybe bid some at 69.75, for some maybe at like 71 or something. And if it opens a little bit too high from where it was trading, you get short. If it opens a little bit too low from where it was trading pre-market, you get long. So, that's what I'm doing is kind of surrounding where I believe that fair value is. And I've made a lot of money over the years doing that. Now, they don't always work, but, in the long run, when you employ a strategy and feel like you got an edge, things work in the long run. I mean, the casino doesn't make money on every single person that walks into their casino. But overall, at the end of the day or the end of the week, at the end of the month, they're usually making money because they have an edge. And, that's all trading is about developing your edge, tweaking it, taking stuff you've learned from other people and then making it your own.
And $70. I mean, we are trading above that right now at
Big number.
70.28. But I mean, someone's been hanging out trying to sell at 70 here for 1, 2, 3, 4, 5 sessions in a row. I mean, there you have your numbers here. So keep an eye on the book, keep an eye on the open. And Dennis, I don't know if people are tired of our 20-minute oil rant here, but let's try and move on and cover some other issues.
Well, we've had a couple earnings stocks here, so just getting away. Actually, right before we go away from oil, we have talked the airlines here too, because the airlines are getting the beat. So what is obviously, good for oil frackers and oil companies is bad for the airlines. Oil prices are going to start going up. It's going to cost them oil, or their costs for the airlines are going to go up as well. And if you're looking, Southwest Air, LUV trading down 50 cents here in the pre-market. American Airlines trading down about 1.5% here in the pre-market. Delta, which is DAL, trading down about 1.2%. JetBlue hasn't really traded down much. It's down about 0.5% there. But UAL is another one. It's trading down about 0.5%. But those are 3, 4, 5 stocks that are probably going to be under pressure here, at least at the open, because people will come in there and say, look, obviously if prices are going up, it's going to be bad for the airlines. I'm going to sell them. So that's why you've seen the airlines under pressure here this morning.
All right, let's take a look. They are trading down. Just we'll do the quick technicals here on DAL because I think that's probably the most tradable of the airlines.
And
Keep
they've
it.
run a long ways. When
Yeah.
you look at this chart here, this Delta Airlines has went from 36 to like 49
Oh.
bucks. So it is sitting here and is rounding. You're getting a little bit of a gap down here now. It's not that pretty. This is, something, okay, well, everybody's been jumping head over heels into these airlines. All of a sudden, their costs might go up some. There could be some people taking some profits in something like this.
Yeah, boy, oh boy. I mean, looking at the charts from yesterday here, we could have told you sellers lining up in the 49 handle, 1, 2, 3, 4, 5 highs right at the 49.30 area. Keep an eye on yesterday's low. We did take that out pre-market low at 47.70, but I'm keeping an eye psychological number like 48. Gets back above 48, might have a chance to rally. The mark is at the close from yesterday. Another good number to keep an eye on, 48.59.
Let's just jump over to the earnings parade. There's not much of a parade here, but there's a couple stocks that reported. We had Splunk last night, but I want to jump to first to American Eagle Outfitters here this morning. AEO is down 10% here in the pre-market. This stock had been running straight up ahead of the report, and it's one of those that you knew they're going to have to blow it away in order for the stock to go higher, and they did not blow it away here. Looks like they came in line. Spencer, you got the AEO numbers?
Yeah, 41 cents versus 41 cents, 941 million versus 940 million, so very in line there. As far as Q4 guidance, they see EPS of 37 to 39 cents. 45 was the estimate.
Ooh.
Yeah, that's a big one. Comp sales in the flat to low single digit increase range.
Okay. The good news and bad news. The bad news, obviously, the stock's down 11% here in the pre-market. The good news is we have had disappointing retail numbers before. Dillard's disappointed, and they came in and they bought the stocks. So I wouldn't be surprised here on a stock like AEO, low in the pre-market 1657. It's already off those lows. I wouldn't be surprised if you actually see some people coming. I don't know if the stock's going to have enough gas to get back to flat or anything like that, but I don't think this is going to be one that just dies and goes down through 1615. I think I'm more apt to be a buyer of this sell-off than a seller of this sell-off because it's down 10% here already, and there has been instances in this earnings season where a retailer has disappointed and they've come back. And I already am seeing some buyers materialize here. I'm seeing 1710. There's an iceberg right now. Somebody just bought 10,000 shares there. It looks like some institutional money might be coming in here and actually buying this pullback in AEO.
Three lows at the 1750 area. We took that out, filling a gap right near 17. I just did a quick 50% retracement of the move from 16 to 19. That takes you to the 1750 area. Pre-market low 1657. I have to agree with you here, Dennis. You back in under 17, fill the gap. I bet you there's some happy shorts here that have been
Yeah.
selling at 19 over the last 4 sessions. Also 19, we approached that in late or mid-September. So there's your resistance. Keeping an eye on the pre-market low.
Splunk, SPLK, also reported there last night. Spencer, what did Splunk have to say?
Q3 adjusted EPS 12 cents, sales of 245 versus 230 million dollars. They see Q4 revenue is at 286 to 288. That's in line. Actually, that's slightly higher than the estimate. In their fiscal year 17 revenue, they're actually raising it from 910 to 914 million, all the way up to 930 to 932 million dollars. So they're increasing their fiscal year 17 sales outlook and looking good.
Nice pop here in this, Joel. What are your thoughts on the levels?
Boy, pre-market high. I'd love to see that if you're long the stock 63.79 because you sold off pretty hard since then. Settling in between 61 and 62 here over the last couple hours, so be keep an eye on that. To me, when I look at the daily and I look at the spike high at 62.90, we are trading below that. That was the high on November 18th. So I'm gonna, throw out the pre-market high 63.79. I'm gonna call 62.90 the key level for more upside in Splunk SPLK.
I've got a filter that runs not only just that, I've got a filter that's running the Russell, but a filter that's running every single stock that's listed in the US. And I've got a whole pile of stocks that are down 99.99%. And then we had a question in the chat here. Peter says, why do some stocks go to 1 cent? So you had this morning where somebody just, was just selling here at the best bid. And there's no bids in the pre-market on some stocks. So you had somebody that would basically hit stub quotes. A stub quote is just called like a 1 penny bid, where there's just somebody just sitting out there at a penny, hoping for a payday. Those trades will all get busted. So they're going to call here on this. So you can see like a stock like GWR closed at $75.98. It's traded at 1 cent here this morning. At 713.24, somebody had 100 shares at a penny. So that if that person calls, and I hope that they do, if they're listening to the show, please call. Call up your broker and say, look, I didn't mean to hit the stock at 1 penny a share. I want that trade busted. It's outside of the level where I think it's 20% the pre-market. If a stock goes outside 20%, they typically will bust it. So the exchange just needs to be alerted to it, and they will bust that. So GWR is one, OXM is another one. Stock closes $75.04, traded at 1 cent. At the same time, 713.24. So somebody screwed up. Obviously, it's probably the same person that did it on multiple stocks here. WWD, it's only 100 shares. So 100 shares traded at a penny. Stock closed 67.38. Last at 1 penny. It literally traded at 1 cent. It's already bid 64.05. I mean, you can just strike this from the tape. It's not going to open, anywhere even down. That's not even going to affect it. They're going to cancel those trades. FDP, HXL, all of these stocks traded at 1 cent for 100 shares. So somebody threw away a lot of money just on 100 shares on a lot of stocks. But as long as they call the exchange up and say, look, oopsie, the exchange will bust those trades.
All right, yeah, you can see that at a penny. I mean, usually you only see that happen in flash crashes or whatever. But yeah, pay no attention to those penny prints.
The lesson to be learned here is there is no liquidity on the majority of stocks in the pre-market. So don't just randomly sell stocks, And I don't know, market orders mine don't even work. So I don't think there's market orders in the pre-market really, anyways. But even if you're just like trying to hit the best bid, or if you have an algorithm that hits the best bid's down a penny, it might actually hit it down there. So be careful with what you're using. Be careful with liquidity in the pre-market because there is none on the majority of securities. So you have to be very, very careful when trading pre-market after hours because you might throw a lot of money away. And I mean, if you hit the stock down 10%, that trade will stand. You'll throw away 10%. When you hit stock down 99%, well, the exchange is going to help you out on that one. But that's something to keep in mind is, you got to be very careful when you're trading pre-market after hours and make sure the bid is the bid. I know, Joel, sometimes you get handleitis there and you're looking at a stock and then remember I used to call him the handler, which is the dirtiest algorithm ever, but there'd be a stock that closed like 51. They'll bid 50 and offer 52. Or there'd be a stock that closed, this is a better example, say stock closed 51, 56. They'll bid 50, 56 and make you think, oh, well, that bid's at the last because you're looking at the 56. No, it's a handle down. And then when you hit it, you go, oh, no, I hit the wrong handle. That's just a dirty out. And it will just literally like bid on that. And I think that's a horrible algorithm. Somebody that's running that, is just dirty as hell. But anyways, you just got to be careful and you really got to watch your handles. Your handle, what I'm saying, is the first two numbers, the numbers before the decimal point.
Dennis, and it's funny. I've been struck. Actually, I'm looking at my S&P sheet here, and I'm looking, and I have 22.11.75. That's the all-time high, and then above that, I have 21.15 and 21.20. So, boy, I'd love to see a study, and maybe you can do this your spare time today. How the S&Ps have reacted every time they've hit a major milestone like 2,000, 2,100, 2,200, and see what kind of. I mean, here we obviously got the 22.11.75, a little by it, but you talk about whole numbers, and 2,200 is held up as support over the last few days. Maybe that could be the key level on the downside to see if we're going to get any kind of correction in this market.
Quick and balanced look here. And you know what? I'm starting to see the financial show some strength. I'm actually surprised that they weren't showing a little bit more strength because you think, before when the financials were getting hit earlier in the year, it was concerns that they were going to have some bad oil loans out there and they were hitting the financials. I mean, as oil stocks come back, those concerns are alleviated here. So I don't know really why, the financials weren't really trading up much, but they are starting to come up here right now. They're starting to move a little bit more up with the overall market here. JP Morgan is now trading up 60 cents. Citigroup's trading up 48 cents. Bank of America is up pretty significantly. It's now up 1.6%. And something else to consider here, Bank of America is ex-dividend today for 7 cents here. So if you were buying Bank of America last night at 2034, not only are you're up here on the trade, you're actually up because you're getting extra 7-cent dividend as well. So banks are looking strong. Bank of America is 231,000 shares to buy. The only stocks I'm really seeing weak, like I said before, is gold's a little bit underwater here today, but the airlines are weak. And then, I'm wondering if retail, because, those are pretty disappointing AEO numbers. I was just looking, I see Kohl's is offered flat there. I see Walmart's actually trading slightly in the red here in the pre-market. So it always seems like there's rotation. And money is going to rotate into oil big time here today. So you got to naturally think, okay, well, if money's rotating around, it's coming out of something. So what is it going to come out of? I think, it's obviously going to come out of airlines, but it might come out of retail here too. So that's a sector that I'd be a little bit cautious on just because we had some pretty bad numbers from a pretty big player in the industry.
All right, and I just want to take a look at Target because that one really had a nice pop, and it's funny you have what Black Friday and Cyber Monday, and stocks really did actually went down the last 2 days. We'll see what happens. Hasn't hit that magic $80 level. Little consolidation after the big run up, so. Three lows in the same place there for Target. Keep an eye on that if you're looking maybe to lock in some profits from this nice rally.
Got about 3 minutes here before we're going to have Tommy Lackey. I want to talk GoPro here, Spencer. They're talking job cuts at GoPro.
Yeah, they're cutting about 15% of the workforce, including their entire entertainment division, to narrow their focus there. It'll they're still trying to return to profitability. Next year was always the goal, so they're saying this will help them be profitable next year. That was always the goal, so this is just part of that.
Well, when you can't grow the top line, you got to cut in the middle, right, Joel? And this is what you're seeing here with GoPro. Shareholders are liking it. They're applauding the move because they haven't been growing the top line here. We know it's kind of been a one-trick pony here, and that trick has not been working as of well lately, and that's why the company is no longer profitable. Stock is trading up 3% here. It's an interesting technical setup here, though, because you've been killed, since, went from 17 down to under $10. You got a little bit of a rounding bottom here, though. Now you get a lift up over $10. I mean, I'd rather see a lift on some good numbers as opposed to just cutting jaws, because really when I think in the big picture, it's not really a great sign that you're cutting jaws. It's telling me that you're gonna, you foresee more trouble still trying to grow that top line, so you don't need as many people working in the company. But it's getting a lift here technically over 10. I mean, as long as it stays above 10, it's interesting.
Yeah, pre-market high. I'll just give you that 10.27. Hit that a few different times. Let's see. Last time we were over $10. Last time we closed over 10 here was back on the 18th, 10.02. So I'll go with you on that one. I mean, if this thing can hold, get back into double digits, close above 10 today. Once again, I mean, you're going on the daily chart, and people are like, oh, whoa, look at this rally. I hope to get out, and we'll see. A lot of overhead supplying this one. This thing was at $18 at the beginning of October.
Yeah, $90 last or a year and a half ago. So that actually, I guess, is 2 years ago, back in 2014. Are we taking a break for Tommy, or bringing him on the fly?
Let's take a break.
Okay, we'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Alconin, along with Dennis Dick and Spencer Israel on the other side of the glass. Tommy Lackey's on the line, managing partner and portfolio manager at Relativity Capital Advisors. Tommy, how you doing on this Wednesday morning?
Doing great. How about you guys? Glad y'all can hear me this week.
And glad you're here back after Thanksgiving. We always like to start your interview with a talk about the general markets here, the triple Qs, the IWM, and the S&Ps. What are you seeing in the charts? Let's start with the triple Qs.
You know, it's they're the one that has not gone to new highs yet. Of all the different major indices I follow, the QQQ, the NASDAQ 100 is the one still yet to get there. So, and we're right there. So, you know, it's a scenario right now to where I wouldn't read a whole lot into anything other than a good, strong breakout or a pullback more than a few percent. Because right here at the high, there's no real problem with us bunching up a little bit, digesting a little bit before we try to go through them. A lot of people want to go through it the first day, but if you look back over a lot of charts, that just doesn't happen all that often if it's a big resistance level like we're at here.
All right, triple Qs, IWM. I mean, what a rally that has had here. Same scenario with the Russell small cap.
Well, I think it's actually an important one to talk about because of how that daily chart looks. It looks like it's just a ridiculous run, and there's just no way it can go any further. But if you take the time to break it down into either a 65-minute chart or a 30-minute chart even, or further, it has been so orderly the way it has climbed after those first few days. The first few days was a surge, but from there, it's just a nice little stair-step type climb as it just keeps grinding its way higher. So sure, we should have a pullback. It can come at any time, but it doesn't have to be today.
Did you say a 65-minute chart?
Yes. That is one of the main charts that I follow is a 65-minute instead of a 60 because it allows you to break your day up into six even candles instead of with most 60-minute charts. What people don't realize is on one side or the other of the day, you actually only have a 30-minute chart there because of the hours our markets are over. So if you split it up into a 65-minute chart, it equalizes the day. It makes it a lot cleaner to read.
Tommy, let's talk here. Your nitrous scan, looking at a lot of stocks here. I see some home builders in here, though. I see Toll. I see Lennar here. What do you see in these home builders?
You know, I've been watching that for a while, and I got to say I'm kind of sad because I missed the original move out of the lows. I had my eyes on it under 27. Looking at not this one, but looking at ITB. I had my eyes on this one around 26 on ITB, which is the home builders ETF, and just completely missed it because I was paying attention to the other things. But jumping back to Toll, it's one that looks like it's got a good move out, and it's still, after it closed the gap here at this 30 level, if you look over to your left a little bit, it pulled back a little bit, and now it's fighting back through it. And again, that's always a good sign when you have an area like that everyone expects it to kind of get rejected at. And it does for a very short period of time, but then buyers come in immediately. And that's kind of what we're seeing here. So if we can get over yesterday's high, I think this one can keep moving up to test that 32 level, and then we'll see what happens from there. That might be a little stiffer of an area. So you either want to be a longer-term guy here, or you want to be just looking to get up to that 32 level and take a quick profit.
What about that Lennar, L-E-N?
Yeah, Lennar actually to me looks a little better because it looks like it's more coming out of its base, and it kind of had that area to where it looking like it wanted to break down under the 42 area, and it stayed under there for almost a month. But it never could go much further, and then it couldn't lose 40. So once it came above that probably 42.40 area, it's in a new uptrend, and now it's just trying to kind of consolidate it here. It looks to me like it's still got some room if home builders in general can keep this strength.
You found a REIT here that hasn't been killed in this Trump market, KRC. Good job, Tommy, because a lot of those REITs have been under pressure.
You know, and there are a few of them. Actually, there are a few of them.
Tommy, you with us still? I know he's here. He's around. But...
I've got Tommy. I hear him.
No.
I think we're hearing him.
Uh-oh.
You're
Tommy,
still.
I
guys
hear you
losing me?
fine.
We're
I think
still good.
Spencer
We're good. We're good.
Spencer's just losing
Okay.
it a little bit. Keep going, Tommy. Sorry about that.
No problem. Well, then in this one again, it's right at these highs. It's testing them, and like I said, most REITs are oversold. So if we do get some move back into REITs, it's always good to be with the leaders.
Let's jump over here to a couple other different stocks. WNC. What are you seeing in this one?
I thought this was an interesting look as well. Hang on. Sorry about
Bosch
that.
National.
Ooh, look at that
Yeah.
one.
It just moved above all the moving averages after a strong move off the lows, and now it's moved sideways for 4 days, right below that 1360-ish area. And if you look over to the left, that's kind of right the area that it popped up to a little bit right before it really broke down. So popping back over that area, I think it sends it back to the highs pretty quickly, which is almost a 7 or 8% gain there. And then again, if you look at this weekly base, those highs right there in the 1450 to 15 area, it gets over that, and you have just got a long runway.
Another one, PCYG, which is Park City Group. You're saying you see a breakout there, 9.74% short float. You know what's interesting here, and there's a couple of these stocks here, they're in the tick size pilot. Now, I don't know if you've been trading any of the smaller cap stocks that are in the tick size pilot, but all that basically means is that they're no longer trading in pennies, they're now trading in nickels. And I've traded a few of them over here over the course of the last month, and I've kind of found them more volatile. So I don't know, it might be the case that you go from 100 pricing increments down to 20 here, but I just want to ask your thoughts here. Have you had a chance to trade any of the stocks that are trading in the nickels, and what do you think of it?
No, I haven't, and I just don't know that it's really going to matter that much to me. I don't know. I trade options a good bit as well, and they trade in nickels a lot too. So it just
doesn't bother you that you can't trade
Yeah,
it?
it's really not a huge thing in that scenario. It's just a matter of saying, and then that's again, if I hate to put it this way because I know we got to be conscious about our entries and exits, but if I'm that worried about the difference between a penny and a nickel, then am I really that confident in my trade?
Yeah, your time frame is far enough that it doesn't matter. It's long enough that, a penny or a nickel doesn't. See, my time frame's like, sometimes minutes or, less than that. So a nickel and a penny is a big difference to me, but you're jumping in trades for $1 or $2, so a penny or a nickel isn't going to make a big deal to you.
I'm hoping so, yes.
Okay, give us your technical thoughts here, PCYG.
Yeah, it was just a really interesting look. I don't know anything about the company, but when you came here, you can see that it's got a nice little cup and handle type with a flag off that for the handle. And then it just popped through really strong on good volume yesterday. And then you flip back to a weekly chart, and this one has a long, thick box right there. It's been in since, early 2014? That it's from the 750 area, all the way up to this 1450 area. And so that's a very wide box and range it's moving out of. That I think if it can hold this and with the volume it's got in, it looks like it's wanting to go. If you got a chance, look at this one with the on-balance volume on it as well. It's just been phenomenal since September when it started rising again.
Tommy, can you explain that on-balance volume? So it's not a term that a lot of people use.
Yeah, on-balance volume is an indicator that basically measures the positive volume days versus the negative volume days, and just kind of continues to accumulate and that kind of a thing. And so it kind of gives you do you really have more up volume than down volume, or days with high volume that are up than down? And it's just a nice little measure. It's not too technical to kind of see how volume is, because I don't like using volume anymore a whole lot on just basic daily bars, because it just is really hard to tell what's going on a lot of times.
All right, let's move on here to the meltdown filter. Melancrot, MNK, and you say it's not looking too good. I won't repeat what you have on the email here. MNK, what are you looking at in Melancrot?
Well, it basically just wants to roll. I mean, this 52 area right here has been an important area for a while, probably 53 more so than 52. And it's already lost that. It was high volume. Coming down off that 68 range was just a monster set of volume as well. So this one just looks like it still has more pain to go before it gets out. And the lows are around 40 on this, so we'll see if it wants to get back down there.
All right, Dad, look at all those lows, and when you see that these lows bunching up since November, and you can distance itself from it. Sometimes the result is not so pretty. Let's move on here. EXR in a huge falling wedge. Give us your take on this issue.
This is one that I think it has. I mean, storage space is a great cash cow as far as a business. It probably just got a good bit ahead of itself, and then Reach just got sold off in general. So it's one of those areas to where you just kind of take a look at both the business and the chart. And the chart still does not look good, but the first thing I noticed here is just kind of a falling wedge we're getting here. And then you had that break below 70 that quickly returned back above it. So I'm watching this one at this point to see if it can stay above that 70 level. And then if it can move above about a 73.50 to 74 level, then it's going to come out the top of this falling wedge, which it could be a pretty powerful move, probably up to the 82.50 area.
All right, moving on here. We still that's it in the meltdown filter. Not much there, Tommy. I'm not gonna make any comments. Okay, so we'll
Trump market. There's no such thing as meltdowns.
All right, let's go into relative strength gainers, and you're looking at a reversal here in ALXN. Tell us a technical setup on that one.
Yeah, we've seen a resurgence some in the biotechs, and they're starting to shape up some now that Hillary didn't win, I guess, is what a lot of people are claiming for it. The reality is, if you talk to the biotech guys and look at what they're putting out there on social media, is that the PE ratios on a lot of these guys are extremely low. This is really where your GARP plays are, the growth at a reasonable price is biotech. It's just, unfortunately, you always have to be ready for the local blow up with different FDA stuff coming out all the time. So, but it looks like Alexion is shaping up. It wants to kind of pull a reversal here in these lows, and you've seen a lot of really good positive options flow in this one over the last month.
And your final relative strength gainer, RMD, looking at a big reversal on volume, and also a notable trade in the options market.
Yeah, I mean, there was a nice trade in there a little while back, and now it's moving over that 60 level and looks like it's trying to break the steep downtrend line off the highs. Now, a move this fast, you want to see, it's got a gap right above at 64, which would probably be the next target. But it also wouldn't surprise me if it moved sideways for a day or two. But this is one to watch, I think, a little closer because it held its weekly trend line that's gone for over 2 years now, almost 3 years. It held it like a charm on that pullback. So I would give it the benefit of the doubt here for a bit.
Yeah, a lot of energy stocks on your relative strength losers, but that probably is going to change here this morning because a lot of those energy stocks with the potential OPEC deal have popped up here now. What do you do? Like when you run a scan at night, obviously then you get huge news in the morning and you see stocks, that probably were looking relatively weak, like a Noble Energy, NBL, like a TW. Then you come in here today and you see these stocks, trading significantly higher, like Hess, for instance, look pretty weak. I agree with you on yesterday, last night, but now it's trading way back up here at 52.31, which is right back where it was 3 days ago here. What do you do, when you're looking at these stocks? Do you continue to stay a little bit, cautious on them, or do you change your opinion?
Well, here's a couple things you have to look at. And one of the things a lot of people make a mistake with is relative strength. And these scans, they look at them as just straight positive, straight negative. Energy had been so strong. I look at how far it came off of whatever its higher relative strength score was and where it sits now. Because if it was up in 99 with its relative strength and it hit this scan because now it dropped to 75, that doesn't tell me it's weak and rolling over. That tells me it's probably pulling back in an uptrend. And so with this scenario, we've had a lot of noise with the oil thing. I have to say I've been very lucky with how I've played it because I guess this is one of the first times I've really played one of these events knowing there was going to be a lot of jawboning back and forth. And so I've tried to just play each edge. Each time something was said, let it run for a little while and then try to say, okay, that's probably enough. And they're going to pull it back the other way. It's kind of like the Fed does a lot of time with their jawboning. But in this scenario, yes, I think that energy is still very close to that breakout level. If you look at XLE, it broke out last week and it pulled back yesterday because of the weekend news of no deal, which happens 9 times out of 10 in these kind of situations. So that breakout to me, until it's fully proven to be a failed breakout, which takes more than 1 day down, is still valid. So I looked at energy as still as an opportunity yesterday, and even looking at it as weak on this scan, they were still a scenario to where a lot of them were right near the support levels that if you wanted to try to play them, you could play them against those with a pretty tight stop.
Chipotle Mexican Grill back in the doghouse here as it's falling off again. It seems like every time the stock gets up into 410, 420, it finds new sellers, and it seems to always pull back in the same area, 385, and that's where it looks like it's trying to go to again. That 385 number has just been. I know it did take it out there back, October, but then it got back up above it. But before that 385 number was huge.
Well, and that's what I would say there is that 385 number is still huge. A lot of times we get what's called polarity, which means support becomes resistance, then it becomes support again, then resistance again, and it for a long time can play on a level. And this is one of those levels to where actually if we come back down to that 385 level and hold again, I would probably play that one because we did break it last time and then come back above it. So if this time this retest does hold it or right around it, it might be a good tight stop play to the long side, but make sure you have a reason that it's turning back up. Don't buy it against it just because it's there. But in that scenario, if it breaks back below it again, I think that's probably your last shot for now, and I think we're probably heading lower.
420 is the new 440 there in CMG. It got up there a few times. Tommy Lackey Jr., he is of Relativity Capital Advisors, sharing his scans with us. Great information. Thanks. We'll talk to you again next Wednesday.
Thanks, guys. Y'all have a great week.
All right. Great question there, Dennis. Tommy there about, using the scans and news and how it affects things. So, Good information from Tommy. S&P's just hanging up here, screaming for a breakout. 21.1175. Dennis, how you doing over there?
Well, I'm starting to really see some trends here in the pre-market, and financials are looking a lot stronger now. They continue to rise here in the pre-market. So, where when we started the show at 8 o'clock, the financials were just kind of hanging out a bit, not up much more than the relative market. Now, if you look at the XLF is up 0.8%, market's only up 0.2%. So, just in the last 50 minutes, you've seen the financials strengthen relative to the overall S&P. I've seen utilities. TLT right now is down significantly, so it looks like it's going to be a risk-on day. That's going to be bad for you utility stocks. It's going to be bad for your defensive stocks. It's going to be bad for any of your REITs and your yield stocks as well. So I'd be very cautious in those sectors here. Also, like we said before, with the AEO numbers, I think I'm going to be a little bit cautious with retail here. And if I'm looking at, the airlines, obviously I'm going to be cautious in that sector as well. Now they're really starting to fall. LUV is down 2% now here in the pre-market. It's fallen almost 1% since we originally talked about it. AAL trade down 2%. Delta Air trade down almost 2%. So you're seeing definitely some money come out of the airlines here as the oil prices skyrocketed.
All right, taking a look at oil still hanging up here. Still no word. Keep an eye on your Benzinga Pro here for an official announcement. Just hanging out here at the 48.50 level.
Couple other stocks just of note here, even from the imbalance standpoint. So we talked the financials already. Bank of America, 510,000 out to buy, so it's up significantly here. Pfizer, 115,000 to buy here, and we haven't talked really the pharma stocks here for a few days. Pfizer, had the big pop, off of Trump, and then it had this run that it just got the beats. 1, 2, 3, 4, 5, 6 down days in a row. Had a little in, and then it had another down day after that. Came all the way back down to $30.63, almost filling the gap from Trump. And now it's starting to show some life here again. It's starting to climb. And now it's sneaking its head above over 32. I mean, the dividend on Pfizer, 3.72%. Like Tommy was saying earlier, you get into some of these big pharma or even in some of the biotech stocks, there's some value here. And I still wonder, if some of these stocks don't start to show some life. I mean, Gilead here, GILD's just consolidated quietly for 5-6 sessions, had the big run after Trump, came back, has given back about 60% of it, but it's still holding on to some of the gains there. I don't know. Like I like, and I'm talking my book a little bit here because I'm long Gilead, I'm long Pfizer, I'm long a lot of the drugs, but I just keep thinking, long term, how do you really go wrong with these multiples here? I mean, the aging population, demographics. You got a 10-year time frame, on some of these stocks. I think some of these are steals.
I kind of like the setup here, Dennis, and Gilead. I mean, a lot of times, you see, big moves and you look at, how to take advantage of them. But sometimes when you get consolidation here, major consolidation here over the last 3 sessions. Keep an eye on 75.50. 5 highs in a row right there. That's key to the upside there. On the downside, double bottom at 74.20. Inside day yesterday in Gilead, but keeping an eye on that resistance, Dennis.
Celgene trading up a little bit. DC was just asking for our thoughts on that. I mean, here's a stock that really didn't give much of the Trump gain back. We had the huge, ridiculous run when it went from 106 up to like 128 bucks that day, which just seemed, or 127, which was a little bit insane. But it's come back, and it's quietly trying to come back, and it looks like it almost wants to retest those highs. I mean, I don't know why this one's been stronger relative to the other ones here. I do own this one in my investment portfolio as well, full disclosure. But what do you think of Celgene?
I think that you had a big bar here on that day, probably right after the election. And now you've just been digesting the move. The Bears and the Bulls are battling it out here. Let's see what happens. Since you had that 127 high, 125 has been the stopper on the upside, and really can't get it much into the 115 handle. So for continued upside in Celgene, got to clear that 125. A nice candlestick yesterday. Bob Wire wants to know why Facebook is down 77 cents here.
Rotation.
Yeah.
We're all running into oil stocks. We're running, into some of the financials here. We got to take money from something, and they're taking it out of Facebook. If we look here, not only Facebook, Amazon is actually trading up here this morning, but some of your other tech stocks, somebody was telling us, the QQQs, they're only up a nickel here. So some of your tech stocks, and I don't know if Facebook, you can really say it's a tech stock or not, but money's got to rotate out of something. And maybe, there's, some news here, individual news on Facebook. Seems like there's news on it every day. But I just think, everything, when the S&P is only up 0.26%, and you got oil trading up 7.5 or 8% here, just the oil rally is probably worth that in S&P points. So the other stocks, when you put them as a whole, need to be flat for that to work out. So when you really start adding it up, you're going to have some weak sectors here today. And if the financials are strong too, you've got to look at what sectors are going to be weak. And I identified obviously airlines, but that's a smaller piece. I think you're going to see some other stocks that money is going to rotate out of, and maybe it's going to be the Facebooks.
There was some Facebook news this morning, actually, Dennis.
There's 20 articles for Facebook every day, so it's deciphering what is important and what is not. But what was it?
M Science came out negative on Facebook. They're a third-party research firm. They see a slowdown in advertiser growth and transactions per advertiser. But
that could be a catalyst.
I've seen that they can have some pull. So
okay, so that might be your catalyst. Facebook. I tend to think there's going to be a few sectors that are probably going to be weaker here today, and we usually can see those in the first few minutes of trade. They'll start to separate themselves, and if you're early on it, there's money to be made there.
All right, Facebook here, Bob Wire. Keep an eye on 120 here. I was just looking at the daily charts. Nice recovery back up. Came up shy of the 124. A couple days of quiet trading, but just look at those daily lows. Not yesterday, but the previous 3 lows right at the 120 level. Ed Parker thinking of nibbling in SCO. I mean, big winner, big loser, Ed. So, playing with the oil market here could be a little dangerous ahead of the announcement.
Hard to call a top or a bottom. Who knows? These things. This is a big move. It's a blowout move for a lot of people. So I'm not going to come in here and say I'm short in oil right off the open. I was saying, individual stocks, they open too high or too low. But I think it's a tough. It's a little bit of a tough call to say, okay, this is the top of this big oil pop here this morning.
All right, it is now 8:59. It's time to wrap up Wednesday's show and get a little preview for Thursday. And we got a big guest coming on tomorrow, huh, Spencer?
Who's Gary Kaminsky, Joel?
Gary Kaminsky, well known on CNBC and other airwaves, will be on the show tomorrow. Give his take on the markets.
We got Gary Kaminsky on tomorrow. If you missed any part of our show today, including our chat with Tommy Lackey, you can catch the whole thing on YouTube right after we're done. Also, we edit the show a little bit, cut out the breaks, and that goes on iTunes, SoundCloud, and Stitcher. Just search for Benzinga on any of those platforms. Don't forget, if you want a 2-week trial of Benzinga Pro, just go to pro.benzinga.com. You can also call us up at 313-723-2000 and just say that you listen to the morning show, and there is a discount for a subscription there. Please always remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Hope everybody has had a good day. so far. Hope you have a good rest of your day, and I hope you join us again on Thursday for Gary Kaminsky. Have a good one, everyone.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.